Right up. Interesting ideas, Polish collection. GPW, STX, HUG. Hello everyone. It's been about 3 weeks since our last write-up. This was done on Context Logic. I have no new information to share, however, I will publish an update on it if any new substantial development news appear. I do, however, have a minor update regarding supplementary material. The CEO of Context Logic has graciously agreed to an interview, so keep an eye out. I expect to be conducted within the next few weeks, and I will publish it once everything is set up. Now for today's topic at hand. I have recently been studying various European equity markets. As part of that process, I've been going through the old trusted A to Z method country by country. It has been a lot of fun, and the process has broadened my exposure to the various different businesses out there. For instance, I have considered or studied shell companies before that, in this instance, purchase and lease out airplanes to other companies as their only operational activity. Or another example was a media company that acquired channel rights and repackaged them for resale across borders for profit. A particular memorable example was an ex-mining company that transformed into a manufacturing chain that later shut it all down for recycling materials for green technologies. The reason it was so memorable was that it reinforced the parallel of businesses acting like a living creature evolving to survive, and yes, again, making me think about Darwin stocks. As much as I would love to go on and discuss all the unusual, interesting businesses, I think we can get more value if I highlight just a bit more detail about a few businesses in a single country that I found are interesting for further research. For this idea, I'd like to introduce you to the first report, which highlights some interesting companies I discovered while exploring the Polish market. I know Poland has been in the news for its economic growth or proximity to friendly neighbors, but that is not the reason I'm selecting these companies. I find them interesting and perhaps worthy of further research. As always, nothing we say or write shall be considered or construed as investing advice. This article is for entertainment purposes only. We may be holding positions in the companies mentioned now or in the future. Please consult a financial professional who knows your situation before making any investment decisions. Back to Poland. Poland's main exchange is the Warsaw Stock Exchange, WSE, which is owned by the GPW Group, of which there is also significant government ownership, which preferred voting rights. Speaking of which, the GPW Group has quite a fascinating Darwin-esque company that I recommend taking a look into. They run both the Polish Equity Exchange, Main Market, New Connect, and Global Connect, the Bond Exchange, the Derivative Exchange, and the Commodity Exchange with the Polish Power Exchange, as well as they own 65% of stake in the Armenian Securities Exchange, AMX. I got slightly off track, and I'm very tempted to make this whole article about the company as I'm a huge fan, but I'll save that for a different time. When reviewing companies on the WC, I was impressed by the businesses listed there, both in quality and age. I find that many are underappreciated. I also observed a bland pattern. When finding businesses, I was intrigued in either by valuation metrics or cash flow generation. A lot of them could be described as a bank or financial institution, a game development shop selling video games or like products, or an ex-industrial powerhouse that has evolved into a green recycling or green development company. My view can be biased, and it's just the pattern I notice. Below is a list of 2 companies that could be interesting to take a look further. I might follow it a few more in following weeks, but as I dive deeper into my short lists. So the first company is Huuge Inc, WSE HUG. As I alluded earlier, it's really amazing the number of game shops that were traded on the WSE. For me, the game development space holds a special place in my heart, having briefly worked in it. Also starting a short-lived venture in it, and seeing a close friend achieve great success there. I also have very fond memories of studying the Activision Blizzard business years ago to learn about the space and from an owner's perspective. Anyway, although there's quite a few shops to choose from, I want to highlight Huuge Inc. WCHUG, again, HUG. History. Huxing's story began in northern Finland, where Anton Goffin, again, I'm going to mispronounce all their names, founded the company in 2002. GameLine is a mobile game development studio focusing on developing games and apps for various handheld devices. Not to lose you, that is the initial name of this company. Its breakaway came in 2006 when its partners with EA Mobile, yes, the EA Sports to the game one, to develop a 3D FIFA soccer for the Nokia Submian. For younger audiences, yes, there were games before the smartphone age. In the same year, the company also opened its first branch in Poland. Following the company's success, BL Streams acquired it in the very next year, 2007, and in the next few years, the studio produced games for iOS, Android, DSs, and other mobile systems, including notable titles such as FIFA, 007 titles, Cam and Sandiego, various DSware games, and many, many more. Then in 2014, Anton Griffin comes back and reacquires the company and rebuilds it under the Huuuge name. Between the sales and reacquisition, he transformed into a venture capitalist and runs a successful family office where, as he calls it, he partners up with firms. And he also has board seats and positions in various companies as well as GameLine until 2009. So in 2015, the company was reincorporated in Delaware with a shift in business to focus on the free-to-play social casinos and casual mobile titles, which is essentially the company we are studying today. Social Casino is a mobile app where you have casino-like games such as roulette, where you don't bet or play with real money, but tokens earned through gameplay, ads, etc. Granted, this theoretical loophole to the definition if you build them around pay-to-play for token games. 2021, the company IPO'd in the Warsaw Stock Exchange under the ticker HUG at around 1.1 billion Polish zloty, or 445 million USD, the largest gaming IPO on the WSE. 2021 also brought changes to the backbone of the business model, which was Apple's new App Tracking Transparency, ATT, affecting the user acquisitions and leading to declining revenues in the whole social casino space. The company tried to pivot with new acquisitions of Traffic Puzzle, with the company sunsetting it in Q1 of 2023. Notably, Anton, through his family account, retains 31.3% ownership, excluding 6.48 treasury stock. He transitioned to executive chairman in 2023, while Wojtek Wronowski, who joined in 2006, has risen to the ranks to become CEO. This shift also took place as the company changed the strategy to preserve the current client base, use cash effectively, and look for acquisitions. One thing that has really grabbed my attention, despite declining revenues management, is they keep calling their company undervalued and putting the money where the mouth is, using a lot of capital to buy back shares, approximately 240 million zloty. Stupid if they're wrong, but a great capital allocation if true. Today, the business is heavily focused on social casinos, with the stated goal of building the most social, real-life, free-to-play mobile gaming platform, emphasizing player interaction, engagement, and community features in a casino-style environment where users play with virtual tokens rather than real money. Their two biggest games lines are Huuuge Casinos and Billionaire Casino, which together account for 90% of the revenues. Both platforms have now surpassed $2 billion in lifetime revenues. Since the industry shift, the company has pivoted to diversify away from social casino space and made significant share repurchases. They have implemented cost-cutting efforts such as 29% workforce reduction affecting 122 employees, closing studios in Finland and Netherlands, are planning to release PC titles of their successful mobile games, and have released Game Pass to better monetize the platform. According to the information I found, executive compensation doesn't seem to be excessive, and the board's incentives are aligned with those of shareholders, with fixed salaries and a 10x multiplier for performance metrics based on long-term results. Employees do not own equity in the business. Now, the idea. The business has been plagued by declining revenues, making the advertising-driven model less effective in bringing in players. Therefore, the average number of users playing has dropped significantly, and the business is, at its core, is smaller than it was a few years ago. For example, the daily users in 2017 were 632,000, while today it's about 375. However, daily average revenue per active users has gone from $30 in 2017 to almost 49.2 in 2024. As the business has matured, Huuuge has been more effective in monetizing while effectively deploying capital. Shares outstanding have gone from 80 million, approximately 81 million in 2020, to 56 million in 2024. I won't bother you with the ratios, but a lot of them look interesting, with a 3.5 price to cash flow, 30.85 return on assets, 35 return on equity, net margins of 31% with growth over the last few years, and a 1.52 book value. Assets are approximately 839 million, with 596 of that being cash and 131 receivables, with net property and equipment and 29 million, 6.81 in investments, and a lot of others. Liabilities are approximately 126 million, and net debt is negative 564.88 million. Business model itself is extremely capital light. The operations business, although declining, are not dead. Management is aware of the issues. Chairman still owns a significant portion of the company, and they appear to be focused on what matters. They have not shied away from purchasing shares, and I seem that there could be something there. I plan to explore more deeply, and if I find anything, of course, expect a full write-up. Stalexport Autostrady, SAWC STX. Quick history. Next up, we took Warren Buffett's advice for finding toll bridges a little too seriously, and found this gem, Stalexport Autostrady SA, founded in 1963 as, oh boy, Przeźbiestwo Hondulo Zagonsko. Okay, I give up. Steel Export. Originally steel traded entity specializing in exporting, importing steel products and raw material. The company evolved, yes, I'm really leaning towards that Darwin theme, and transitioned into an infrastructure company, taking advantage of ongoing privatization across Eastern Europe in the 1990s. And in 1993, the company was transformed into a company wholly owned by the state treasury and then privatized, paving its way for listing in the WSE in 1994. In 1997, the company won the winning bid for a 30-year concession, so from 1997 to 2027, to construct and manage a 61-kilometer toll section of the A4 motorway between Katowice and Krakow. In 2004, the concession was transferred to an entity established solely for this purpose. So, for those not familiar, A4 highway stretches over southern Poland, so very close between Ukraine, Slovakia, Czechia, across the side of the border. I have some images if you're interested in the report. Without bothering too much about the rest of the history, there's an excellent time presented by the company on their website. You can also find it in the report below. Where it is today. So the company is structured through 4 subsidiaries. Of course, I'm going to butcher every single one, but the parent holding company is, I'm just going to go parent holding company Stalexport Autostrady SA. The Stalexport Molopska. Okay, I'm just gonna give up. Malopolska, so or Sam owns the concession and operates the road. The Transroute Autostrade, now operating the Via SA, is the toll collection supports management service and operations assistance toll system. The Bayru Constrom is the property management and leasing service, including office space and parking in Katowice. And the Autostrad Dolonalska involves some potential motorway projects or expansion, particularly in the lower Silesia region. That will be prime focus after 2027. Today, 99% of the revenue comes from the toll collection of the 61-kilometer road. That means that the business is in a pivotal point since its concession expires on March 15, 2027. The company has attempted to expand the project, including adding a 3rd lane and extending the concession. However, the General Directorate for National Roads and Motorways, GDDKIA, has firmly rejected expanding the concession, favoring Stalexport in a PPP for the A4 expansion, stating it will revert to a state control in 2027 and become toll-free for vehicles under 3.5 tons. So the business is tuned for a change soon. Additional information. Some of the things I found in the company is it's very transparent. Once you learn to navigate through all the possible options on the website, you can find a lot of detail. Specific shout out to the IR department, as it appears that they respond questions with a publicly published follow-up. You can find that on their website. As investment information presented creates a better feeling, perhaps a flaw. It's lowered my guardrails, but that's just the research is for. Ideas and final words. So why could I possibly be interested in a company about to lose its operations? Well, first of all, they still have, we'll call it a year and change of operations on the road. They've historically had an attractive yield from managing the road, and stable currency seems to likely to yield active returns. Plus, the added tailwind of not needing to spend a lot on infrastructure improvements with the concession expiry seems the company will focus on milking the end of the contract. For the purpose of this quick and dirty analysis, I will refer to the other lines of business as negligible. Toll road business in your purchase. The company currently has a market cap of 27 million Polish zloty, with about 5.1 million in debt, and has 645 million zloty in cash. No dilution of shares, and generates roughly 0.74 zloty per cash flow per share. If we assume similar earnings today, year to date, I know the traffic has been growing in the section, hence growing earnings over the past few years, but let's ignore that. We can estimate that, call it 130 million zloty in net income, or 100 to 220 million in operating cash flow a year. So if we continue operations at the end of the concession payments, shareholders for the 18 months remaining, you could get a 2x return on enterprise value alone. I know a lot of level 1 thinking, but hence this is a teaser idea. However, it appears that you have a significant margin of safety with the cash, and the uncertainty can result in substantial returns. So thank you. I mentioned I highlighted a few that caught my eye in further research, and I'm sharing them with you in case they bring value. I'll do a few more pieces like this in the future if it seems as a net positive. Hope you enjoyed and found it interesting. Cheers. Daniel.